Hello and welcome to Trading Wire. Markets started this week on a strong note, but underneath the surface, volatility and sector rotation are still shaping where money is moving. Today, we're breaking down what happened in the markets on Monday, the biggest issues we dealt with last week, and the top stocks and sectors to watch going into this week. Let's get into it. Major U.S. equity indices finished higher Monday, extending the sharp rebound that began late last week. Tech stocks led the move higher, pushing both the S&P 500 and the Nasdaq higher, while the Dow Jones Industrial Average set fresh intraday and closing records. This follows a major recovery move on Friday when markets surged after Thursday's sell-off. All three major indices jumped at least 2%, and the Dow surged more than 1,200 points, crossing the historic 50,000 level for the first time. So here's what we dealt with last week. Last week was dominated by three major themes. First, AI spending concerns and tech volatility. Investors are starting to question whether massive AI spending, estimated at hundreds of billions of dollars across big tech, which could pressure margins and valuations. Second, sector rotation. Money has been moving into energy, industrials, and consumer staples away from some high multiple software names. And third, there was extreme sentiment swings. Fear indicators spiked, suggesting markets could remain volatile short term, even if long-term trends remain bullish. Let's look at the top stock movers, some of the biggest individual movers in the news. In the tech sector, AI stock Supermicro Computer, SMCI, has been riding the AI boom, raising its 2026 revenue forecast to about $40 billion thanks to massive demand for AI servers. But investors are watching margins closely as costs and competition are squeezing profitability, making SMCA a high growth but volatility play. Taking a look now at tech with consumer discretionary. Amazon or AMZN declining slightly Monday again. Amazon has been bearish mainly because investors reacted negatively to their massive $200 billion spending plans, a weaker profit outlook, and an earnings miss on profit but not on revenue. Markets often punish stocks when future profit outlook drops, even if current revenue is good. And the market has been volatile about big tech AI spending overall. In the healthcare sector, let's look at DaVita in the news. DVA has been getting bullish attention after strong earnings and an upbeat 2026 outlook, guiding full-year earnings above analyst forecasts. Strong dialysis demand and improving kidney care programs are helping drive growth. Overall, DaVita looks fundamentally strong, but some experts say keep an eye on the risks. Let's look at Hims and Hers. HIMS plunged Monday, down roughly 16% after announcing it would stop offering access to its copycat weight loss product Wegovy. This cast uncertainty on its growth strategy. In the transportation and logistics sector, XPO stock has surged on strong freight earnings and manufacturing recovery trends. Shares have rallied on earnings beats and analyst upgrades, but investors are watching margins and freight demand closely as the cycle evolves. So looking ahead and the macro catalyst to watch, this week markets will focus on inflation data, jobs data, Federal Reserve commentary earnings follow through from big tech, and geopolitical developments that could impact energy and commodities. So the final takeaway: right now, the market story is focused on AI as a dominant long-term theme to watch, but valuations are under scrutiny and sector rotation is real. This is becoming a stock picker's market, not just an index momentum market. If you want weekly breakdowns of top stocks to watch, macro market trends, and trading catalysts, make sure to subscribe and comment below.